Wasting money on cures. Forgot how to fix myself. They say that time is free. Then why is it so precious? Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. Time is running out. Time is running out. Lately I've lost my track. I've sailed the deeper seas, hoping to find something to bring back better times. Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. But time is running out. 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 Time is running. Time is running out. But time is running out. What if my best days are over? They can be over. They can't be over now. Time is running out. What if my best days are over? They can't be over now. Time is running out. Time is running out. Time is running out.
Hi there, welcome. It's Monday night, 6 o'clock. Welcome to the 9th in our autumn series of 10 live streams. We take a key topic or we take a key revision skill and we just spend 25 minutes or so with some questions, some challenges and some revision help really along the way. I know quite a few of you got mock exams this month coming up and also perhaps some international CIE mock real papers in November coming up. So good luck with those. This will be useful for those papers because there's often multiple choice questions on economic efficiency and welfare. In fact, the 5 questions I've chosen today have all come from those international exam papers or from the past A-level questions. So welcome everybody. We're going to cover economic efficiency and welfare, and then next Monday is our kind of 10th session. We're going to look at monetary policy, a bit of a macro focus. So please do join us for that. If you're watching live, as many are, just remember to subscribe to the channel, press that like button if so minded, and contribute to the chat window. We'll try and showcase some of the best answers in the next session. Here we go. Here's our big reveal to start with. Okay, so can you tell me the name of the business? 5 clues. Here's the first clue. It's a business that blends quite successfully e-commerce with social media. E-commerce with social media. And we've got our production team looking to see if we get the right answer and who's the first person to get it correct. So people saying Facebook, TikTok, Gymsharp. Good answers. Incorrect. Here's the second clue. Their business is based on a peer-to-peer platform trading model. So essentially it's a platform business that brings buyers and sellers together and they make their money on the back of commission, small percentages. Charlie B says it's Greg's. Well, it's normally Greg's in these things. Sam Lloyd says it's Tutor G. Sam, we're looking for a slightly smaller business than Tutor G. Here's the third clue. Quite a few look very good on platform businesses. 90% of active users belong to Gen Z, under 26. So it's not me, it's not Jim, but it's you. 90% of active users belong to Gen Z. Fourth clue. It's a platform fighting against fast fashion. Put my teeth back in. And a lot of you saying Vinted. Good answer. And here's a fifth clue. Removal of the local populace. A cryptic clue. Now, Jim is scanning the live chat, and I think we do have some correct answers coming in. And it is indeed, here's the correct answer, it is indeed Depop. It's been sold. I visited Depop a few years ago. Simon Beckerman was the co-founder. He showed me around. It was a really amazing place in London, but it's now been sold. So I don't know who, and somebody can maybe post in the chat with who's now bought Depop. I think they bought it for $1.5 billion. Highly successful. Yeah, Jay Junior says, I say it first, and I think you're right. We'll put the VAR onto that and see if that's true. I think the VAR is coming in, and indeed it was you. Well then, here's our multiple choice question. So if you're taking your, before we do multiple choice, bit of exam gold, my bad. This topic we've chosen tonight because I know from marking thousands of exam scripts every year, the students who bring in efficiency and welfare into their answers always do better. Okay, so this is an area of the micro spec where if you really understand efficiency and welfare, you'll always get stronger analysis marks, and it also helps the evaluation. You can bring efficiency and welfare into your evaluation. Now, crucially, I ask my students to adopt a case-by-case approach. So if it's telecoms, the answer could be subtly different if it's pharmaceuticals or if it's broadband. Okay, so it doesn't matter, but always adopt a case-by-case approach. And crucially, think about the likely consequences for efficiency in both the short and the long run of different market structures. So if you've covered that in year 13, monopoly, oligopoly, perfect competition, etc., please do think about efficiency and welfare in your essay questions in particular. Let's crack on. 5 questions for you. Do have a go. Keep your own scores, please. We won't take the papers in. Question 1. What might over time reduce dynamic efficiency in an economy? And these are all past paper questions from the last 2 or 3 years. Nice little test for you. What might over time lower the amount of dynamic efficiency in an economy? And this is where you can use a micro concept at a macro level. And some good answers coming through. There seems to be a consensus. Give everybody a few more seconds. So John Burles and Will Carver and Chin, some of our regular contributors, all saying C. Let's double check. Yes, and that's a big issue, isn't it? The idea of share dividends, share buybacks, profits, which are essentially re-channeled to shareholders instead of into R&D. So it is C. Great start. Here's number 2. Oh, yes. Quick apology. I'm back, so I had to get dinner. On the back of that, we expect to get this question right. Number 2. In which market structure is dynamic efficiency least likely to occur? I think there'll be a difference of opinion here. I do have the right answer. In which market structure is dynamic efficiency least likely? What do we think? Is it perfect competition? Pardon me. Is it contestable market? Is it duopoly? Or is it monopolistic competition? You can tell we've got a great group here tonight, a very, very savvy and smart group of young economists. They're all pretty much saying A. Sam's saying, what's for dinner? Let's double check. The answer is perfect competition. Yeah, because it's a market where there is no real differentiation between products. There's no real genuine return to innovation in a world of perfect knowledge. Great answers. Number 3, here we go. Let's crack on. What is most likely to improve the allocative efficiency of a market? It's a 2024 question, by the way. So what do we think here? These are 5 questions from previous international exam A-level questions taken by students in the winter of 23 and 24. And James Sweeting and Apex, James Hogarth, Kudzai coming in, Nikita, all saying C. Let's double check. Yes, the entry of new firms into the market makes the market more contestable. Often, new firms are operating at the cutting edge of technology. So, for example, if you're a new firm producing, I don't know, garden trimmers, that is firms operating at the cutting edge. Question number 4. Now, this is a good one. Love these diagram questions. Again, this is past paper. Diagram shows marginal private benefit, marginal private cost, etc. The equilibrium is point X. The question in green, what should happen to achieve allocative efficiency? What do we think? So we're currently at X, which is a private optimum, but not a social optimum from an allocatively efficient point of view. So what should happen if we want to achieve an improvement in allocative efficiency? So Robert Peel, Ben, Terry, all coming in with A. Let's double check. Yes, presumably through some sort of carbon tax or pollution tax. Final question, everybody. Here we go. Question number 5. This diagram is perhaps the one that is most commonly drawn in any A-level exam every year. But well, but Ash and everybody and Will all got that right. The diagram shows the costs and benefits of producing steel in a free market. Which area measures the dead weight loss of welfare? What do we think? Is it RTS? Is it RUS? Is it TUS? Or is it YTUS? Which is a funny shape. What do we think? Which area shows the dead weight welfare loss? Nikita and James, John all come in with A. Let's double check. It is indeed A. Yeah, that's one of those diagrams, one of those go-to diagrams. I'm sure many of you will be using that in 2026. Add up your scores, please. Please do post in the chat window your score, especially if you got 4 or 5 out of 5. So I just basically put in the AI, find me 5 A-level questions on economic efficiency. So well done to Chin. Oh, wow, loads of 5s coming through here. Have a look at the chat window, everybody. Very, very good. And these are all past questions. Great stuff. Now, today we're going to look at 2 little mini case studies. Okay, so that's before we do that, quick reminder about allocative efficiency. A lot of students often say, well, I never don't quite get it. What does it mean? Allocative efficiency basically means the market allocates things in the optimal way, matching supply and demand and marginal cost and marginal benefit. So one way of thinking about it is this diagram. You can see the supply curve is upward sloping. It's basically a marginal private cost curve. The demand curve is downward sloping. That's basically the marginal private benefit curve if you know your externalities. At the equilibrium, at point S there, price P and price output T, at that price and output, we have the maximum consumer and producer surplus. We can't get a bigger welfare triangle than that. If we were to increase producer surplus, we'd lose consumer surplus, and so if output was lower than T, there will be a dead weight loss. So when price equals marginal cost, output at welfare is maximized. Okay, so that's allocative efficiency. Let's look at 2 little. Okay, so to what extent do you have to explain the concept of the welfare loss to secure high marks? Yes, I think you do. Most students would include it in their analysis to start with, showing the market failure. A lot of students are able to show how a tax or a subsidy might offset the welfare loss to achieve a social optimum output. You can bring the concept in both your analysis and evaluation, and yes, that will help you score high marks. Okay. Thank you for that question. And if you post some more questions during the session, we'll do our best to answer them. Okay, so I've got 2 little mini case studies, as always, for you tonight. Let's spend a few minutes on this one, bus travel. Should bus travel be free for young people? Now, Scotland brought in a national entitlement card, an NEC, for people aged 5 to 21, giving them free bus travel. uptake has been high. Hundreds of thousands of young people have registered to get their card. Over 200 million free journeys. And of course, tomorrow night in New York City, Zoran Mandami, who's odds on to win, is pledging free and faster buses if he gets elected on the 5th, Wednesday the 5th, the morning of Wednesday the 5th of November. So it's a really topical issue. Okay. So here we go. In that context, over to you. Can you give me 2 arguments in favour of free travel on buses for younger people, and try to bring in, if you can, an efficiency or welfare perspective? Let's start the clock. So what are the arguments in support of a policy of subsidising or making available for free younger people? And we're on the lookout for those welfare and efficiency arguments, the economic arguments, and we'll showcase some of them on the screen. Some good economics coming through. I like the point about externalities. I like the point about structural immobility of labour. A few people saying that it improves labour mobility. Often people can't afford to go into an interview or go to the training centre. There's user TZ, reduce negative externalities from car use. I like that point because it then allows the diagram to come in. Orberg talks about lowers negative externalities, lowers inequality. Yes. Okay, that's interesting. So you can see this is a progressive policy that has social welfare effects. This is good stuff, everybody. Affordable access to public transport reduces the regressive effect of bus fares. Yeah, I'm not sure if bus fares are regressive. They're not a tax, then it's just a charge. They are actually technically an inferior good. People on lower incomes tend to spend more of their income. But a lot of you talk about increased geographic mobility, labour force effects, which I really like. Okay, here are my 2 points. I've gone for social welfare. So literally the cost of transport can be a barrier for young people trying to go to college, apprenticeships or vocational training, particularly if they're in areas with poor bus connectivity or from low income families. So in that sense, investing in free travel for younger people can be seen as a progressive policy for those on below median income. And I think also the market failure aspect. So many of you were talking about this in terms of externalities, lowering the amount of traffic on the road. Buses are especially electric buses, of course, much more carbon friendly form of transport, reduces air pollution, brings down the overall carbon footprint, and addresses some of the negative externalities. So as long as you bring in some sort of welfare and market failure arguments, that's what the examiners really want to see. Great stuff. Well, let's twist it. And let's see how good your evaluation is, please. Now you can attack. What are the drawbacks? What are the limitations? What are the downsides of a scheme to subsidise free bus travel? Have a go. So let's see what you can come up with here. Evaluate the arguments for the government providing free bus travel for younger people. Now you've got to evaluate. Let's see what our team can come up with. Yeah, James Sweeting's point about opportunity cost is a common point, but I really like the fact that he developed the point talking about the money could be spent elsewhere, such as the NHS, or to subsidise electric charging points or whatever, to bring down externalities. There's a finite pot of money for government subsidies normally. Jonathan Bills talks about Ricardian equivalents could come into play. Really interesting. Here's a point. Bus travel subsidies could make bus travel firms less efficient as they're less incentivized to be cost efficient. Yeah, they'd still get the money from users. But it'd be on a sort of per capita basis. So a lot would depend on the financial agreement between the government or the city. John's point about Ricardian equivalents, presumably there's the argument that today's beneficiaries are tomorrow's taxpayers, and the government may well end up having to borrow more money. Very interesting, Ulberg almost provides a mirror to that point. Quite a few talking about effectiveness. Kronos was talking about overcrowding of buses. Really good points. I like that. It's good economics. Here are my 2 points. I went for cost. Now here's that. This again is worth noting. The cost-benefit approach. So if, for example, Scotland offers free bus travel for young people, okay, that's based on age. It's not based on income. Now, most economists, not all, but most economists prefer the benefit. So essentially, the Scotland government gives people a benefit in kind, free bus journey. Fine. A lot of economists favour cash transfers or means-tested benefits. In other words, targeting the support, targeting those subsidy dollars and pounds on those people who need it most. So this is really saying, well, the subsidy might be relatively ineffective. It goes to those who maybe not need it. So it's based on age rather than income. Crowding and overuse, yeah. Quite a few people saying it, and it was really good to see in the chat. It's going to lift ridership. It could lead to overcrowding, particularly at peak times. Actually, paradoxically, it brings down the unit cost per traveller because a full bus is more efficient than a half-empty bus. And then again, groups of young people can increase. Right, there you go. Geoff, I said the second point. Get VAR. VAR is in operation. It's semi-automated. It has to be said, but it is semi-automated tonight. It's in there. Young people, vandalism, intimidating behaviour on buses. Although, in my experience, young people on buses is absolutely fine. It's the older people who cause most of the issues. And thank you for that supportive point. I can't look at all the answers. I do my best, but we get so many great points. But well done for that point about overcrowding. So interesting. So just generally thinking about the economics here. Accessibility, equity is a kind of social welfare idea. So free bus travel is basically an affordability concept. Can you afford to travel? Some students link it to unemployment. I think Jonathan talks about structural unemployment. It does help the process and the cost of job search. And you can argue it brings down economic inactivity. So that'll be a really good link to a labour market issue. And most of you got the externalities point. Of course, that would then invite the diagram, wouldn't it? You could then draw a diagram. Particularly if you think that bus travel is American. However, it probably an inefficient policy, probably. And also you can always talk about effectiveness. So the policy, if you offer free bus transport for young people, it is very sensitive to cost. Not just the cost of the subsidy, but can the bus companies afford to run services? It's probably likely to be most effective in an urban setting, but less effective in a rural area where there's often limited, very rare, irregular bus travel. And so the policy is likely to have less impact. Okay, good stuff. Right, let's do one more. I've taken Nvidia. Now, the reason I've chosen Nvidia for our last little mini case study tonight is that it's now reached a $5 trillion stock market valuation. And in fact, it was the first company in the world to reach this market value, $5 trillion. To put that in context, my friend Ian Stewart, I gave him this information from Deloitte this morning. At this valuation, Nvidia's shareholders could buy every one of the 600 or so companies in the UK stock market. So Nvidia could buy the UK stock market if it wanted to. Well, over the last 3 years, Nvidia has evolved from a niche graphic cards designer to an AI behemoth with a boom in AI driving demand for its chips. Look at the revenue chart there. That is Staggering. And that's just a forecast for 2025, likely to be higher. Okay, here we go. Here is your first question. 2 little challenges for the group to finish with tonight. Can you give me 2 possible positive effects of the growth of Nvidia on economic efficiency? This is a real test of your year 13 economics. Have a go. This is one of the most popular kind of case study businesses. Has appeared on exams a little bit already. Who knows for 2026 and beyond. Is the rapid growth of Nvidia good for economic efficiency? Some great answers already coming through. Yeah, Charlie's spot on there, really good. Got some superb economists in tonight. GZ Jim talking about specialization and innovation. Yeah, and Minnie is coming in with productive efficiency and dynamic efficiency. Excellent point. Really good. Yeah, so here we go. You don't need to know much about Nvidia, but it's a great case study if you want to go. Yeah, Will Carver comes in. There's Kronos. Dynamic efficient, long-term supernormal profits can be invested into innovation or development. And I think Will Carver's point, economies of scale. Quite a few have mentioned economies of scale, specialization of labor, bringing down the cost per unit over time, making a better quality product. And John says, this is a really good point. This is almost like the price mechanism year 13 style. Supernormal profits might encourage other firms to enter the market, depending on the barriers to entry, which drives further innovation. Nvidia itself is actually a challenger firm, really was. A lot of people who work for it used to work for other businesses, left and founded it. Wow, look at these answers coming through. Concise point here. Supernormal profit, supernormal efficiency, supernormal profit, I think. Yeah, and then link it to consumer welfare in the long term. Wow, these are great. These are great. Let's see if you've matched mine. Hard for me to match your quality, but here I'll have a go. I've gone for dynamic and productive. So it's really key in the exams to be very clear. Okay. Nvidia's huge profits and market valuation provides the resources, the profits and things for investment in R&D, such as developing the next generation of chips. Now, I don't know what those chips will look like or taste like. But interesting, one of my former students always used to say 3rd generation chips. 3rd generation. Didn't have a clue what that meant, but it sounded pretty good. And also economies of scale. So rapid growth at scale allows AI companies and data centers to process massive amounts of data and hopefully less energy per task, which of course is a big environmental issue. So I've gone for dynamic and productive. In theory, some good potential gains in efficiency. Last question for tonight. Over to you. Let's go overboard on the eval, please. Can you give me 2 possible negative effects of the growth in Nvidia on economic efficiency? This is going to be great. Have a go. So our last chance to contribute to the chat win tonight. Hope you found this session useful on efficiency and welfare. Is the rapid, enormous pace of growth of Nvidia, is it necessarily good news for economic efficiency, or if you want, social welfare? So Charlie's point is really a social welfare point, but the examiners would accept it. Yeah, some good stuff here on barriers to entry. Quite a few talking about monopoly power. Good stuff, everybody. Keep it going. Hey, Bella, lovely point there about incentives to be used efficiently. It's hinting there at X inefficiency. Actually, Terry Lung, the risk of X inefficiency is using monopoly power. Really good stuff coming through. Thank you for picking that one out. Wow. I mean, many of you will have done your market structures now in year 13, so this is a great great case study. Here's Robert Peel's answer. Controlling a key resource like computer chips creates a highly price inelastic product, allowing it to manipulate prices to create supernormal profit at the cost of consumers and other firms. So kind of cost effect all the way through the supply chain of businesses that use these products. Or Nikita, the benefits of low cost achieved through scale economies may not necessarily be passed on to consumers as the absence of competition. The company has no incentive to lower prices. Wow, superb stuff. I can't improve on that. Here are my two answers. I literally can't improve on that, but I've gone for dynamic inefficiency. So Nvidia's immense dominance, essentially it's a near monopoly, has created a barrier to entry. The lack of significant direct competition in the long run might reduce the pressure to innovate and create some inefficiencies. And also, I think Minnie talked about this, allocative inefficiency. So the extraordinary demand for AI chips, including Examiner AI, of course, GTG's outstanding product. Nvidia can charge high markups, price above marginal cost, and therefore that's a loss of allocative efficiency. The counterpoint, if you want to evaluate the evaluation, there's the link from Jim. Can we have it on the screen, please, Jim? We've had loads of people signing up today for our Examiner AI, especially with mocks in view. Just go to ai.tutor2u.net to get your free credits. The counterpoint is that high profits reallocate global capital and skilled labor towards AI. So Nvidia's success, I think John Bills was talking about this a little bit earlier, actually generates a net flow of resources into the industry, which of course is a recipe for more innovation, more competition. Despite the barriers to entry, lots of small firms are operating like hidden wiring in the market, many of which won't succeed, but some will become huge firms in the future. So we've looked at free bus travel and Nvidia, two of the many case studies. It's what we always do on a Monday night. We always take a topic, we take some multiple choice questions, we look at a little, couple of scenarios, and we just try and link your economics and give you a bit of application, which might be useful in your papers. A huge thanks, by the way, to all of our students who come every week. We've got a brilliant group. Spread the word. Let's get a few more coming along on a Monday night. Next week, we are doing monetary policy. So if you fancy half an hour revision of monetary policy, please do join us. In the meantime, if you've enjoyed the session, consider pressing the like button several times. Stay happy, stay healthy, stay curious, and see you sometime soon.